Hello to all traders and welcome back to another market review brought to you by Orbex. So the long weekend in America has come and gone. President's Day was yesterday, and usually when there is a public holiday in America, when the markets do open, we have more of a flurry of activity, and that's what's happening in today's market. We're seeing a more of a strong dollar as the market has have reopened. However, we're seeing that the Dow and S&P and Nasdaq in particular are looking to bounce back after a disappointing run in the last couple of sessions. So the Dow is looking to be trapped in what is possibly a symmetrical triangle. We're seeing what the tops and bottoms are to get more of a signal for the next move to the upside or downside. S&P as well we're going to be looking at today, as it's in a more of a bullish momentum since its drop, since it found support in October. So it is looking likely that with the FOMC meeting tomorrow, we'll get more clarity if the Fed is going to start raising interest rates again, but not as progressively as it was doing last year, 75 basis point hikes every time. Now it's supposed to be 25 basis points. But with the robust positive news that the non-farm payrolls gave in the last session, the Fed is looking likely that it will probably keep on raising rates. But how aggressively, we'll have to wait for its meeting in March for the next rate hike. So let's look on the Dow first of all today. So like I said, it looks to be trapped in a symmetrical triangle at the moment, but slightly favoring the upside. And what we're just seeing now is a few bearish candlesticks in the last session, but we're looking to see if that's going to hit the previous bottom, roughly around the mid 33,000 handle, before we have another push to the upside. What's more important though, with the Ichimoku cloud indicator, as you can see here, it is in the middle of all these spikes to the upside or downside. Apart from this false spike here, what it looks like that we saw just over a week ago, we're seeing now that possibly we're going to have another test to the downside before we test this channel once again. I'll just remove these drawings, a little bit easy to see. As I said before, you usually just get a bit confusing, but as you can see here, if you just extend this just for now, we're seeing most likely that we will have another slight downturn, a slight correction, before we have another push towards the 34,000 handle once again. Not too much in the way of divergences on the RSI. As you can see, very much in the middle of the relative strength index, and it looks like it's probably going to keep going that way for the time being. If we look on the 1 hour chart, just wanted to give you intraday because daily charts is not looking too optimistic at the moment, or opportunistic rather. And as you can see here, the latest slight downturn that we've seen on the Dow sees us moving away out of the bottom border of the Ichimoku cloud, which means that most probably there will be another leg lower, and this will, as I said, bring us down to the mid 33,000 handle. We're trading just above that at the moment, so about another 100 or 200 points to the downside. Not out of the question in a given American time zone for trading as well, when that opens shortly. So we'll see what happens. It's looking more likely than not, but obviously we'll keep an eye on the fundamentals as well. And speaking of the indices, just want to look at the S&P as well, because this has been in a bullish channel since it found a bottom in October, which was quite significant. Very big bullish candlestick to the upside, and then since then, as you can see, it's just been progressively going higher and higher. If we put a slight channel in here, as you can see here, and just zoom it in, we're having many quite good support roughly about the 3800 area before we started peaking above the 4000 mark. And the 4000 mark, as you know, good psychological level for a lot of traders. So this is what we're going to be looking at for the next few trading sessions as well. But obviously remember, the FOMC is the catalyst for a lot of big moves in the market. Fed Jerome Powell did say if the US jobs number, if the PMI data is still very good next time around, then they could possibly go to this 50 basis point rate hike next time around. Obviously inflation has dropped quite significantly from the 40-year high at 9.1% that we saw in the middle of last year. However, it's still got a long way to go, before it gets the 2% that is supposed to be the magical number for the Fed. It's probably going to have a long while to wait until it gets there. So it'll be interesting to see what the Fed have up its sleeve for the next few meetings. If we're looking at the 1 hour chart, not too much in the way of movement there. We're just seeing this kind of choppy consolidated movement, slightly to the downside, as you can see here, but most probably it's going to pick up slightly and we'll test it against the Ichimoku indicator roughly about the 4100 handle, another good psychological area. So if you're trading indices this week, let me know what you're trading on. I'm going to put this on our Telegram channel, on our YouTube channel, so feel free to comment and let me know what you're trading on, and we'll get back to you with all the latest in the fundamentals and technicals next time around. So thank you very much and have a great trading day. Bye for now.